In this video, you will learn a step-by-step trading strategy by using a multi-time frame approach with exact entries and exits. So welcome back and welcome to a special video with a complete trading strategy. We're going to use the multi-time frame approach, and I will show you exactly how to get into trades, how to find exits, and how to manage your trades. So by the way, this is in the background. What you'll see is the trend rider, which is an indicator that we developed. If you want to get it, there's the link in the description below with all the information. And I will use this indicator in this video, but you will also be able to pick up important pieces of information without it. So what we are first going to do is we are starting on the daily time frame here, and on the daily time frame we want to find big levels. That's very, very important. We are not going to trade random signals and random trades all over the place, but having only trading opportunities and only getting into trades at key support and resistance areas is going to increase our win rate much or in a very, very positive way. So we have here on the Euro-Yen on the daily, the previous support level here, really big level, the 124 big round number as well. And you can see the market rallied into this level here last week or 2 weeks ago. And when we take a closer look still on the daily time frame, we are seeing that this is a very, very strong rally that happened on the daily time frame. You can see we have multiple large bullish candles, probably 2 or 3 consecutive bullish weeks. Also, when we use our Fibonacci tool, we draw it from here to here. We have a nice 61.8 retracement, and the market then ends on the 261.8, which basically means that you are looking at a very, very overextended trend. And it is very likely at this point to see a type of exhaustion, maybe even a reversal, and that's exactly what we are looking for. You can see the trend rider on the daily is still green. Also here on the momentum study, it is still green, which means that it is too early to sell. There's no signal that we should be selling now, and that is very important. We're going down now one time frame to the 4-hour, and we can see the background is still green. The histogram is also still green, so we are still in a bullish territory, and we need to wait it out. We go down even more. Now we on the 1-hour time frame, still the same setup, still the same time and point in time as we left off here on the daily time frame. So here's the pin bar. This is how the pin bar looks on the 4-hour. This is how the pin bar looks on the 1-hour. And on the 1-hour, we can find a very nice pattern. And that is the key. We are not going to trade randomly. We are always wanting to see multiple confluence factors that we are stacking in our favor. So we have the big support and resistance level from the daily time frame. We have the overextended 261 Fibonacci. And on the 1-hour time frame, we find a breakout pattern that looks like head and shoulders. So we draw our neckline in here. We connect the lows and the low and the low. And you can see that the momentum study here on the histogram is now neutral. It is not green, it is not red, so there's nothing to do here. And we are waiting for a breakout below the level here, and we must have a red histogram on our indicator. And you can see the market advances a little bit. We switch our vertical or our diagonal trend line for the head and shoulders now to a horizontal, which is a little bit less objective. So we have a very, very nice support level. However, you can see the histogram is still gray or neutral. It's not bullish, it's not bearish. And that is really one of the strengths of the indicator, of the trend rider. It helps you stay out of the market because many traders have an issue, and many new traders especially have an issue with being patient. They always want to get into trades too early. They are afraid of missing trades, and the trend rider really helps you stay out of the market with confidence. And then here is then the first signal. You can see now the candle broke out of the support level. You can see we have our first red histogram on the momentum study and the background. So this may have been your first entry. Your stop loss usually goes a little bit above the breakout area. You can even put it above the last swing high. And you can see then afterwards the market didn't immediately sell off, But what we are seeing is a retest pattern. So if you don't like trading breakouts, then you wait for the retest. The retest happened, and again, when the trend rider momentum study turns red, that is your second signal with the retest. And then basically you just stay in the trade as long as the momentum study is red and as long as the background color is red. That is your confidence, and that's the confidence the trend rider provides on trade management. So it doesn't only help you with trade exits or entries, actually. It doesn't only help you with staying out of trades when it is neutral. It helps you getting into trades, but it also helps you staying in winning trades. And I have seen in many traders that I mentor is that staying in winning trades long enough is a big issue. So the trend rider also helps you with that. So basically, as long as the trend rider is red, you're good to go. Of course, it doesn't work all the time, and sometimes the market will just go against you. But this is how trading works. We are not going to look for something that works 100% of the time. We just want to put the odds in our favor. You can see we advance a few more candles. The background color is still red. The histogram is still red. So we're good to go. And you can see this is now the first time after a long period that the histogram is turning neutral. So you can see, although the background color is still red, the histogram is turning neutral. And this is then the time to get out of the trade if you haven't already taken profit. Some people use hard targets based on previous support and resistance, for example. And other traders like to just follow the momentum study. That's really up to you, and you can play around with it once you have the trend rider. And again, make sure to check the link in the description below for all the information on how to get the trend rider. Now let's take a look at a second trade. And again, we are starting on the daily time frame. This is the S&P. So the trend rider doesn't only work for Forex, but you can use it on commodities, on indices, and even on stocks. And it is available on MetaTrader 4, MetaTrader 5, and TradingView, by the way. So on the daily time frame, again, we are looking for key support and resistance levels. We see that the market here on the left-hand side has a very big support level that caused multiple bounces in the past. And now the market is back at the level after a huge rally. So that's always what we want to see. We want to see an overextended market, and we want to see that the market arrives at a key resistance and support level that may improve our odds significantly. Now we go to the 4-hour time frame, and we can see the histogram is green, the background color is green, so we are not doing anything. It is still bullish. Don't fight it. Listen to the trend rider. Now we go to the 1-hour time frame, and you can see now we are seeing a pattern. That is always what we need. Once we see on the higher time frames that we have an extended trend, once we see that the market arrives at a key level, we want to go to the lowest time frame, in this case the 1 hour, where we find a trend, a pattern actually. And patterns are defined by trend lines or support and resistance levels. So we see we have something like a head and shoulder happening right here. And you can see, although the trend rider here gave you a red signal, it happened before the breakout happened. And this is not a signal. We always need to have a confirmed breakout. Otherwise, it is not a good and solid enough signal. So you need to have a breakout out of a diagonal trend line or out of a support level. And you can see this is when it happened. The price kept going up, didn't make a new higher high. And then we have our trend line. We have a breakout. And this is our first signal here. The histogram is turning red. So this would have been or could have been your first entry. You can see the first entry didn't work out. This was the first candle here. The market went against you and probably would have stopped you out depending on your stop loss size. But that's totally fine. We adjust our support level. Now we are having a horizontal support level. Once again, we connect the support and this support and adjust for the latest support area. And now we are back at waiting mode. We want to see a breakout. And you can see, although the histogram already turned red, it is not ready yet. We need to see the confirmed breakout out of a structure. That's really important. And we get that 2 candles later. Now we have already 3 consecutive histograms that are red and bearish. So this may have been your entry signal. Again, the stop loss probably goes somewhere around here. Stop loss size always depends a little bit on the trader. Some people like to trade it more aggressively with a smaller stop loss. Other people like to be conservative and use a wider stop loss. Play around with it and see what makes sense to you. And now the idea is again the same. The trend rider helps us stay in winning trades with confidence as long as the histogram and the background color are agreeing. And you can see this is what happened afterwards. We had another small retest, and then the trend rider, it didn't even budge at all. It really nicely helped you stay in, or may have helped you stay in, this huge bearish trend that happened over probably almost 200 points. And you can see this is now the first candle where the background color is still red, but the histogram is turning neutral. So this is then a good time to get out of your trade if you are not already out. So you can see the trend rider has many functions. It's the trading tool that I developed because I wanted to have it in my own trading, and it's also developed around the weaknesses that many amateur traders have. And I think this is adding a lot of value. It helps you stay out of trades when there's nothing to do. It helps you time entries. It helps you stay in winning trades. And it may also help you find exits. So again, check the link in the description below. Let me know if you would like to see more of those videos. I look forward to hearing from you in the comments. Until then, happy trading.